What is going on, everybody? Welcome back to another video. Let me go on ahead and get the mic over here so we can jump right into this one. Let's cue the intro.
I've been getting dirty money.
Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So that being said, let's jump back to the video. So this video is going to be a little bit different. You guys obviously see the title, how to retire earlier. Now, everybody knows where you need to go in, and everybody is going to tell you, any financial analyst, any financial guru, blah, 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 blah. They are going to tell you to probably buy one of the funds that looks just like this, VOO, which is also made by Vanguard, the S&P 500 ETF. Also, you could do like a SPY or something like that. The S&P, it's going to mock the S&P 500. And I've got no problem with this. I just want everybody to know, if you're investing like this, it's going to take the traditional route. There's no way of getting around, if you're buying VOO or SPY, that it's going to take a lot of money to retire. And something I've ran the numbers and I've been over this myself, and you guys know we use this portfolio back tester. And what I like to do is I like to test, If the minimum is $1 million to retire, and I'm going to keep investing $500 after that, or say, I'm not going to invest anything because I don't need to anymore. So we're not going to do that. But we are going to keep reinvesting. So I want to go here then, and you guys are going to see I've changed this up just a little bit here when we're looking at the portfolio visualizer. The portfolio is a little different. So instead of just taking PTY or UTG or something like that, I took a couple that we've been talking about, PTY, UTG, QYLD, which is a big one, NUSI, JEPI, and then I added VOO on here as well. And I just want to show you the differences. The money is going to talk for itself here. Now you can look at all these charts and everything. And this is the big thing that I want to talk about. So for $1 million here in the year 2021, you would have gotten, obviously, based off of this one right here, you can see where it says $56,506 in just dividends. That's just portfolio income that you can literally live off of. That's like saying you make $50,000 a year, you can quit your job and literally make $56,000 a year. That's the median average household income in America. I think it's actually $50,000. So you have an extra $6,000. Now there's some taxes and things like that. Again, if you're smart, or if you're going to get big into this, you're going to learn how to get around those things. And that's something that, again, I don't think people think about enough. But getting around taxes, yes, there's legal ways of getting around taxes, whether you start investing in real estate and things like that, and have your home and house hacking, a bunch of different things. But this way, we're looking at just retirement on just stock portfolio. $56,506. Now, this does make up a bunch of little stocks. Or not little stocks, but multiple really good income stocks. And these could change. These could get better. These could get worse. This is just saying if I wanted to stop right now, this would be my percentages probably. And roughly about where they're at right now. PTY is probably a little bit higher. You're probably sitting at about 45% for mine. And personally, I would get rid of JEPI. That's just me. That's not everybody. So again, if you do things like that, you just get rid of that. We don't care about it anymore. You're going to get rid of this. And we're going to add 10% to PTY, because this is going to make a big difference actually here in the portfolio income, and you're just going to see this really fast. So all of a sudden now, for portfolio income 2020, you would have made $84,000, and close to $85,000. You're right there on that mark. And then this year you're already at $61,897. And then if you would have had the same amount of money for VOO or SPY, you're looking at $8 or $9 grand, maybe, $85 to $9 grand. Guys, that is not enough to live off. And then you're going to have to start selling these stocks, guys. Just so you know, the way our retirement plans are set up is if you have $1 million here, you are going to have to start selling shares of stock to start living. I don't want to do that. I want to be able to leave money
to my kids, my whatever, my dog maybe, you know. I want to be able to go and do whatever I want and not have to worry about the income coming in. Because again, that's why I am a dividend and income investor rather than just a regular investor. And I think that's an important part to show. So if you want to retire a lot earlier, I'm not saying you need $1 million. Say you only need to make 30 grand a year. And I know people that live very, very comfortably off of 30 grand a year. 1, 2, 3. Is that right? 500. 1, 2, 3. Yes, make sure all them zeros combine, you know. So getting them big numbers. This is exactly what I would tell anybody to do. And I'm not a financial advisor whatsoever. Make sure you guys get that. But here's 30 grand. All you need is $500,000. All of a sudden, now you're making 30 grand already this year. And forget that, now you're making $42,000 last year. Guys, that is exponentially bigger than $8,900. Now, maybe you would have saw some more growth in your actual overall cash. Would be slightly higher by about $100,000. Yes, but your income is not. So me, I personally like to find the middle of that. Now, what does that mean when I say finding the middle of that? And I think this is where a lot of people nowadays are starting to go towards. If you're watching one of these videos and you've been learning more and more about stock trading or investing and things like that, I think more and more people are leaning towards this, where, you know, instead of just buying VU or SPY or the S&P 500 and having a mutual fund or something like that that's going to pay you eventually, instead you're going to have both combined. And I think this is a really big thing that not a lot of people have started doing. I mean, I know there are people out there, of course, that are like me and that, you know, this is all we do and we like messing with the numbers and we like seeing what's going on. But at the other end of the spectrum is you got people that just go to work every day, they put their money somewhere, and they do not care about anything after that. This is that fix. You know, having these pies here that have some diversification in them are going to give you that monthly income, and maybe your overall net worth ain't that high compared to maybe your best friend retires with $1 million, but he's making what every year compared to you're sitting on a beach, or maybe you're sitting at your paid off house. You guys got to remember that when it comes down to your net worth, your house, your other assets and stuff like that. I'm not saying just invest in the stock market. We own the home that we live in. You love it. You have equity, things like that. There's a ton of different things when it comes down to this. But having these stocks, and again, these are just some of them. There are a ton of other dividend stocks. You can add other REITs and stuff like that. If you guys listen to Grant Cardone, you guys know that you're not making near as much money as you should if you own a REIT. So instead of owning a REIT, I would rather just go and buy multi-family households, or, invest in real estate, flip houses on your own. I know personally we could flip this house already, and we've only been in it for a couple months. So doing things like this is what's going to allow you to retire a lot earlier. So again, we've already beat our income there. Let's see what happens if you have $250,000. Guys, there are people that make $250,000 every single year, and they are broke because they do not know how to budget. They don't know how to invest. They don't know how to do different things. So this year you're already at $15,000. So I'm going to say you're actually at so you made $21,000 last year. $21,000. That's still a good chunk for $250,000. You made $21,000, and you're probably on pace to make about that $30,000 this year. And that's just going to exponentially climb. So guys, start now. Start investing. You don't have to be the absolute best investor in the world, but get some of these stocks. If for every share of, SPY you buy, pick up 2 or 3 shares of PTY, UTG, QYLD, and that's kind of how I started. And then I like getting those monthly dividends, and that gets me to invest more and more and more. And that's how I started. So again, if you want to retire early, this is what you're going to have to do, unless you are an absolute high performer and you're going to make millions and millions and millions of dollars, and you're going to be able to retire by 30 or maybe 35 or 40 years old. Otherwise, you're not going to retire until you're 60. So with that being said, guys, thank you guys all for watching this video. I hope this helped somebody out there. If it did, please leave a comment below. Let me know. And what videos can I make next to actually show the realistic part of it and how to actually do it. Thank you guys, and I will see you guys in the next one.